Well, hello friends. Hey, it's Jamie here, and happy Pi Day and Inflation Metrics Day. Let's talk a little bit about the latest numbers on inflation. We just got our February CPI numbers. We're going to talk to you about the shelter component of that number and how it might influence the future. And we're going to talk to you about what's next when it comes to inflation and how that will affect our economy and our housing economy. So let's get right to the numbers. February inflation. The headline number was 0.4% month to month increase in inflation, and it was expected to be 0.4%. So we came in at expectations, and so the market should be fairly stable. Annually, we actually saw a 0.4% reduction year over year, which is positive, but again meets about expectations, so we're not going to see a lot of movement related to that. Now, core inflation, and if we keep in mind core inflation are the primary numbers, things like food, energy, and housing, that was up 0.5% month to month, which was about a tenth of a point higher than what was expected, and annually was actually down just a tenth of a point rather than 0.4 of a point, right? Based upon higher housing costs and energy costs right now. Now let's look at those higher housing costs. The way that they measure shelter, well, first and foremost, shelter and housing costs of CPI represents about 43% of the price index for consumers. In February, that represented about 0.8% of the increase that we saw, or about 60% of the total overall increase in inflation. So it makes up a major component of the inflation that we're seeing right now. Year over year, shelter costs were up 8.1%. And the challenge that we have with shelter as it's measured in the CPI is it's a lagging indicator. Because of the way that they measure shelter, it tends to lag by 12 to 14 months, the actual costs. Right? And so here's what we can look at. This came from MBS Highway, forwarded to me by a mortgage partner who really respects their economic analysis. And so what we can see here is the purple line here is the actual month-to-month changes, or the year-to-year changes, I should say, in apartment list rent, right? So what apartments are costing folks to rent. So a good metric of housing costs, right? And you can see here that these swing much more significantly than what we see the CPI shelter. It tends to be a yearly average, so the average the last 12 months. Well, you can see that what ends up happening here is that we're still, even though we've been almost 12 months of declining increases in housing costs in the actual month-to-month view, right, we're still seeing an increase in how CPI measures it. And what we're fully expecting is when we measure this, if we look at how long it's been about a year since we've peaked, we're likely going to see is that this began to peak and decline, right? And the importance of that decline is significant because if you look right now, if rather than showing the 8% year over year increase, we were to reflect the difference here, which is 5.1%, and we multiply that by the share of the CPI number that shelter has, we would see a 2.2% decrease in inflation, which would mean that rather than having 5.5% core inflation right now, we would have 3.3% core inflation. And if we had 3.3% core inflation right now, the markets would be celebrating inflation being reasonably under control, much closer to that 2% target that the Fed says that they want. Right? So what's next? Most likely, we're not going to see this lag catch up to us until about May to June of this year. The earliest signs that they're expecting are May, right? So next month, we're probably going to see another lackluster number when it comes to inflation, just based upon continuing to see that higher than actual level of housing inflation. once we can see that catch up, we're going to see a significant or potential significant decline in inflation, and that will lead to further stabilization of our broader economy and also importantly stabilization of mortgage rates and hopefully a decline in those mortgage rates as risk profiles go down. So I hope this information is helpful to you. If you've got questions, give me a call, shoot me a text. I'd love to answer those, or think about attending our upcoming Sips and Tips event on the 28th of March. See our website for details and to RSVP. Thanks for watching, and we'll talk soon.